Hello there. Welcome back to Cost and Management Accounting N6. Today we want to look at a question paper of November 2022. Uh, for that question paper, we want to look at question 3, and that question is on budgets. So this question that we have on that question paper, which is our question 3. So uh, basically, a budget is a calculation plan which is usually measured in monetary value. But you can also have some budgets being prepared in terms of quantities. For example, you've got the production budget, which is not measured in monetary value, but it's only measured uh, in quantities, a quantity of units. Remember, in the production budget, we want to see the number of units are to be produced, for example. So number of units is the basis. So there is no measurement in terms of monetary value. So that is what we have in terms of explanation of a budget. It comes as a calculation plan. So we have this question. So we want to look at this question, and then we answer the questions that are going to follow of different types of budgets that we are giving in this question. So the question reads, Lutendo Manufacturers Limited provided the following information for the financial year ended 20th February 2019. The company is busy doing upholstering work on launch suits for hotels. The launch suits consist of a 3-seater and a 5-seater suit. Raw material cost, we have got material, which is 100 rands per meter, sponge 25 rand per kg, direct labor 25 rand per hour. Then beneath that, we are given stock costs. Beneath that, we are given stock costs there, whereby we have got a column for stock material, sponge 3-seater and 5-seater. And obviously, for the rows now, we have got stock there, and then we have got closing stock, opening stock, expected sales, and then selling price per unit. Then we've got the breakdown on finished goods produced per unit as follows. We have also columns that we have for 3-seaters, 5-seaters, and we have got material, sponge, and direct labor. Then lastly, there we have having factor overhead expenses, where we have a fixed cost of 350,000 rands and variable cost per unit, which is 16 rand 50. Draft each of the following budgets now on the required part. So the first one is the sales budget. So we want to prepare the sales budget, but basically on this sales budget, what we are looking for is the projected amount of units a company anticipates selling in a set period of time and the revenue it could earn. So this is the basis of preparing this sales budget. So at the end, we want to calculate the figure for total sales, the value of the total sales, whereby we are going to multiply the expected sales in units, and then we multiply by selling price per unit. So if we come to your answer section, our answer section here, you'd see that we have our sales budget that we have there, and then we've got a column for 3-seaters and 5-seaters. Remember, we've got 3-seaters and 5-seaters in the question. So this is what we have. So the first item that we are going to start with there, we are going to start with expected sales in units. Here we have got expected sales in units. Expected sales in units. So we are going to try to see what we have in terms of 3-seaters and 5-seaters in terms of expected sales in units. So we can go back there and try to see what we have in terms of those descriptions. We go up there to see what we have expected sales in units of 3-seaters and 5-seaters. We are seeing that here we have here we have got for 3-seaters, we've got expected sales of 600 units. The 5-seater, we've got 500 units. So these are the figures that we are looking for, 600 and 500. So we can go back to enter those figures. We have 600 here, and then here we've got 500. So this is what we have. Then from there, we now want to see the selling price per unit. So selling price per unit. So on selling price per unit, you are going to see again in the question what we have in terms of selling price per unit. We go back to check those selling prices. We are given them here. Selling price per unit, we have got 2,500 rands for 3-seater. The 5-seater with 3,500 rands. So we can go back there to enter those figures in the appropriate columns. We have got 2,500 rands. Here we have got 2,500 rands, and on 5 seaters, we've got 3,500 rands. So this is what we have. Then finally, we are supposed to have our total sales, whereby basically for our total sales, we are saying expected sales times selling price per unit. So here we are saying 600 times 2,500, then we get the value of the 3 seaters sales. So if you multiply the two there, we are supposed to get 1,500,000. Then we do the same to 5 seaters. We are now saying 500 times 3,500 runs there. Then we get 1 million. Yes, 1,750,000. 750,000. So this is what we have, and also here we should show that it's the value we are expressing in terms of value. Then this is what we have in terms of sales budget. We go to the next one, which is the production budget. So on the production budget, now what we want to calculate is the number of units to be produced. Is the number of units to be produced. So the formula that we are going to employ there is that we are going to say sales, and we add closing stock, we subtract opening stock. As simple as that. Then we get the number of units to be produced. But when we add sales, we say sales plus closing stock, we are going to get the total stock requirements. Then I will subtract the opening stock. So we get so that we get the number of units to be produced. So what we are going to start with there, we are going to start with expected sales in units. So here we are going to say expected sales in units. So for expected sales in units there, we can go back there to recheck, but we now know them that we have 600 and 500. We have got 600 for expected sales for 3-seater, 5-seater, and 500. So these are the figures that we are looking for. I will go back there and enter those figures. Here we have 600, and here we have got 500. So this is what we have. Remember, we are saying sales plus closing stock. Then we add a desired closing stock. So we add closing stock there. So for closing stock again, we go and check what do we have in terms of our closing stock. What do we have in terms of our closing stock? So closing stock, we are given it here. We are given it closing stock there, and we can see that we've got 300 units for 3-seater and 300 units again for 5-seater. So at the same number there. So we can add 300. We are adding 300. Then we can add there to get our total. When we say 600 by 300, here we get 900. 500 by 300, here we get 800. So this is what we have. And this description of these figures is total stock requirements. So here we are saying total stock requirements. So this is what we have there. And then beneath that now, we want to see what are we supposed to do. We are getting total stock requirements. Then finally now we are subtracting open stock. So here we are saying less opening stock, less opening stock. So here and now we are going back to see what figures do we have in terms of our opening stock. But we are given the figures there. We are now here. We are saying our opening stock is 250 units here for 3-seater and 160 units here for 5-seater. So these are the figures that we have. So we come here. We are saying 250, and remember here we are saying less. So here we are subtracting, and then we have 160 for 5-seater. So 160, and then we show by brackets that we are subtracting. Then the final figure that we are going to get there is a number of units to be produced. Number of units to be produced. So this is our figure that we are looking for in the production budget. So remember, we already have a total here of 900 and a total here of 800. So we are now saying this total minus opening stock, 900 minus 250, and then the figure that we are supposed to get there is 650. We do the same here, 800 minus 160, you get 640. So these are the final figures that we are looking for in the production budget. That is number of units to be produced. Then we can move on to the next budget that we have according to the question right? According to the question, the next budget that we have is the raw material budget. So the figures that we got here, that is number of units to be produced, are very important. These are the figures that we are going to use in the raw materials budget. Again, they are going to be the opening figures that we are going to start with. If you go again and look in the manufacturing overheads budget, we are also going to consider those figures. They are very important. And also in the direct labor budget also. And so in all the budgets that are here in this question, we are going to start with those figures for a number of it to be produced, which means a production budget becomes a pre requirement in terms of construction of budgets. So very important a production budget it is. So we can now go to the next one, which is the raw material budget. So let's try to see what we have in terms of the raw material budget here. Right, on raw material budget, we are going to start with the production requirements. Production requirements. But these production requirements, remember, the requirements of the production are these figures that we calculated in the production budget, that is 650 and 640. So in the production budget, we are not going to classify in terms of 3-seaters and 5-seaters, but we are going to integrate them and put them as one figure. So what we're going to do, we're going to add these two figures, that is 650 plus 640, so that we get the total production requirements that we have there. So if we say 650 plus 640, you're going to get 1,290. So this is the figure that we're going to start with here in the raw material budget. So in brackets here, you can just summarize here the calculation that we are saying 650 plus 640. So this is what we have. And then in that production budget, now we can put the amount that we are having there, which is the total, which is 1,290. So this is the total that we have. Then from there, we can now put the material needed per unit. Material needed per unit. So the idea here is that we are going to calculate here by saying 1,290, then we multiply by the material per unit so that we get the production needs. So the figure that is going to come here is the production needs. So basically, we want to see the material that is needed per unit. And remember, these are 1,290 units. So if we're going to multiply by the material needed per unit so that we get the production needs. So for that one, we go back there to see what is the material per unit. What is the material per unit? So we come here in the section of breakdown of finished goods produced per unit, which we are given here. So if you go to the question, also let's go back to the question there and try to see this raw material budget specifically is for the sponge. Very important to take note. Specifically is for the sponge. This is our question. There's a specification there that we should concentrate on the sponge. So we are just going to go on the row of the sponge on the table that we are given there. So here sponge here we are saying the material per unit now. So it means here they've clearly indicated that breakdown on finished goods produced as per unit. Very important. So it means whatever we are given here is per unit. So if you go to sponge, you'd see that there's 40 kg. This is the material per unit. And also it applies again to a 5-seaters 40 kg. So we've got similar or the same material per unit, which is 40 kg. So 40 is the figure that we are looking for. So we're going to put that 40 there. So here we are now saying material needed per unit. So we are saying 40. So to get now the production needs, we're now saying 1,290 times 40, then you're going to get 51,600 kgs. Remember, this is 40 kgs. So it's very important to put the units, the appropriate units according to the question. So from there now we add. So we are just again repeating the same formula that we are using at first. remember at first for the production budget, we said sales plus closing stock. Then we subtracted opening stock of units. So here now we are on material. So we are going to say our sale, our material that we have are there, and then we add our closing stock again. We are also going to subtract the opening stock. So here we are not going to use sales as such, but we are going to use the production requirement in terms of the production needs, and then we add the closing stock, then subtract the opening stock. So we're just going to it's just the same or the similar formula that we used before for the production budget. So here, after getting the production needs, now we add desired closing stock. We add desired closing stock. So we can go back to the question to see what we have in terms of that closing stock. We go back to see what we have in terms of that closing stock of material. Let's try to see. Right. So the material, in terms of the material, is this section. We are here. That's where we have kgs there. See, this is where the material is. So that's where we're going to give our opening and closing. So we are seeing that for the closing stock, we are, remember the question is on sponge specifically, highlighting on sponge. So we are here. We are in this column. So for sponge, the closing stock is 8,500. So we are going to pick this figure, 8,500 for our closing stock. So we are going to put that figure there is 8,500. So we have got 8,500 kgs. And then we are adding. And then when we add, we now get the total needs. The figure that we are going to get there is represents the total needs. 1,600 plus 8,500, and then you get 60,100. And then after getting this figure, remember we are now less opening stock. Right, we go back to the question to check what figures do we have in terms of this opening stock. But remember, we are on that column for sponge. So here we are saying this was our closing stock for sponge. Then our opening is here 13,000 kgs. So very important there. Then we go back to put that figure. We have got 18,000 kgs. So this figure we are subtracting. So we can just show in brackets that we are subtracting. We are subtracting here, right? We subtract there. So after subtracting there, we now get the material to be purchased. Material to be purchased. So the figure that we are going to get there is going to be material to be purchased. So we are now saying 60,100 minus 18,000. Then the figure that we are going to get is 47,100 kgs. So we have got 47,100 kgs. So this is what we have there, 47,100 kgs. So this is the material to be purchased, but this is in terms of the quantity of the material. So we want to see the value of the material. So we need to go and check the cost per material so that we get the value of this material. So here we are now saying costs per material. We are given that cost in the question. When we get the cost here, we multiply by this one, then we get the total value of material to be purchased. So here we go back there to check the cost per material. So basically we are just checking the cost per kg. So if you come here, you'd see that for sponge we've got 100 rands per kg. The same applies to 5 seaters, so it's very similar. So we are just going to pick that 100. It's going to be our value per kg. So we go back there to see what we have. So here, remember, we are saying it's 100. So we are saying 100 here. It's 100 rands. So we multiply now, put 7,100 plus 100 rands, and obviously we are going to get 471,000. 471,000. This is now in the rands. So that's the value. So the description of that answer there is the value of material to be purchased. The value of material to be purchased. So this is what we have. So this is our final figure in terms of raw material budget. Specifically, we are looking at the sponge. So this is what we have, guys, in terms of the raw materials budget. So we can go and see the next budget that we have in the question. Now we have direct labor budget. So on the direct labor budget, what we are looking for, we are going to calculate the total direct labor cost. The total direct labor cost is what we are going to calculate. So to calculate the total direct labor cost, we need to know the units to be produced, and also we need to know the direct labor time per unit, and we now get the total hours. So by getting total hours, we are now saying units to be produced times direct labor hours per unit. Then we get the total hours that are needed there. Then we go and check again for the cost per labor hour, so that we multiply the total hours. Then we get our answer that we are looking for. That is the total direct labor cost. So the figure, the description that we are going to start with there is the units to be produced. Units to be produced. Like I was emphasizing, that units to be produced is very important, because it's going to help us in all the budgets that we have in this question. Units to be produced. Remember, the units that we calculated on the production budget, we had 650 for 3-seaters, and we had 640 for 5-seaters. So we now want to know the direct labor time per unit, direct labor. We can just say direct labor hours per unit. Here we are saying per unit. Per unit. Right. We can go back to check what we have in terms of direct labor hours per unit. For direct labor hours per unit, let's try to see. We are here, direct labor is here. So our direct labor hours per unit for 3-seaters, we have got 20 hours here. And then for 5-seaters, we have got 35 hours here. Very important there. Then we go back to enter those figures, 40. And we have got 20 and 35, sorry, 20 and 35. So we have got 20 hours here. 20 hours, and then here we've got 35 hours. So this is what we have there. Here we have got 20 hours, and they have 35 hours. So this is what we have. So now to come, the figure that we want to look for there is total hours. So for us to get our total hours, we're now saying 650 times 20. So when we get the total there, we multiply there, we get 13,000. 13,000 hours. And then we do the same here, 640 times 35, we get 22,400 hours. Then we now look for the cost per labor hour. The cost per labor hour. Cost per labor hour. So the cost per labor hour, obviously, we are going to get it in the question again. So we go back there to check what we have in terms of cost per labor hour. So here we come here now, we get it here. Then remember, direct labor is here. So the cost per direct labor hour, we have a 95 here, 95 here, similar. So it's 95, 95. So we go back there to enter that one. So we are saying cost per labor hour, we are having 95 here, and we are having 95 here. And remember, this is in rands. So now to get the total direct labor hours, we are now multiplying total hours times the cost per labor hour. 13,000 times 95. Here, when you multiply, you get you're going to get 1,235,000. And then we 22,400 times 95, we get 2,120,000. And then we get to total direct labor cost. Total direct labor cost. Total direct labor cost. So this is what we have in terms of the direct labor budget. So we are only left with our manufacturing overheads budget. We are only left with our manufacturing overheads budget. So this is manufacturing overheads budget that we have there. Remember, to get the total manufacturing cost there, we need to know the variable cost and fixed cost. Then we add the two to get the total, and then that's what we are looking for. So basically, the final figure that we are looking for in the manufacturing overheads budget is the total manufacturing overheads. So we are saying to get that total manufacturing overheads, we need to add the total variable costs, then we add the fixed overheads, and then we get the total. Remember, the fixed overheads does not change with the level of production, so you're just going to have the same figure. But for the variable now, we need to know the variable per units of each in terms of 3-seaters and 5-seaters. Then we also multiply the number of units that we found in the production budget. Then we get the total variable cost. So that's why we have got 3 columns there. So we are going to start with the number of units to be produced. As always, number of units. Number of units to be produced. So we have got 650. Remember, these figures we are putting them from the first budget up to now. We have 640. Then we add the total. We have got 1,290. Something that we calculated before. Then we now need the variable cost per unit. We now need the variable costs per unit. And obviously this one we are going to get it in the question. We go there to check what variable cost per unit we have. But if you go at the bottom of this question, you are going to see that variable cost there is mentioned there. We come here, you see that our variable cost per unit is here. We are given it as 650. We are given it here as 1650. So this is what we have. And also the fixed cost, we can just pick it here. We are having it here is 350,000 rands. 350,000 rands. So it means this fixed cost applies both to 3-seaters and 5-seaters. So the total fixed cost for 3-seaters and 5-seaters is 350 rands. But for variable costs, we are calculating them separately, and then we add them to get the total. So we go back there to enter those figures. So we are here, variable cost per unit, remember, is 1650. So we are saying 1650, and so also going to apply here 1650, and on the total again is 1650. So here we're not going to add the two. This is a variable per units. The total is applying to the number of units where we add the two, then you get this figure. So having written that one, we now need the total variable cost now. Total variable cost. So on the total variable cost now, we are multiplying 650 times 1650 to get the total variable cost. We do that, we get 10,725. We got 5-seaters again, 1650 times 10,560. 1650 times 640, then we get 10,560. So this is what we have there. Then with the total now, we add the two, this one plus this one, and we are going to get 21,285. Right. Then we now add E plus fixed costs. Remember the figure for fixed costs, we can go back to just confirm that figure, but it should be 350,000. Then go there for fixed costs, we are given it there. Right, this is the figure for fixed costs, which is our 350,000 rands. So you can go and put that one. Right, fixed costs. So we are saying fixed costs, we are not going to put them in these columns of 30,000 and 5 seaters because that 350,000 rand that we are given applies to both seaters. So we are just going to put it here on the total column. We have got 350,000. So what happens now, what we are saying now, we are now adding variable plus fixed. So what are we saying? Here we have got fixed, and then we say this is our variable. Our variable is total is 21,285. Then we add to 350,000. Then we now get our total manufacturing overhead. So here now we have got total manufacturing overheads. So this is what we have. So if you add the two, there, the total that we're supposed to get is 371,285. 371,285. Right. So this is what we have, guys. Remember, this is the last part of our budgets. We've got the manufacturing overheads budget is the last one. This is what we have, guys, in terms of this question of budgets. That was question 3 of this question paper of November 2022. Hopefully, this video was helpful. Let's stay tuned for more videos to come. We are still coming. Let's subscribe and share. With that, I'm signing out for this video, but we meet again in the next video.